How are all my fine viewers doing this week? Mikkel Hayden here for another Finance Friday video. We're going to be going over some great finance from the last couple of weeks, so I hope you guys enjoy. Let's get into it. The first thing that we'll be talking about are oil prices. A few articles that go over what's going on with those and how that's affecting gas prices. If you can remember, and if you saw the video back in September, we were looking at how oil prices were rising and hitting almost that $100 per barrel mark. And now since then, as those prices have been going down since September, almost 15% even, the fear for a squeeze and those continuing increase in prices have subsided. Two big crude oil companies, West Texas Intermediate and Brent, both have futures for oil that are getting close to and even below that $80 a barrel mark. Now, Western Texas Intermediate is sitting at around $72 a barrel, while Brent is closer to about $77. Now, the good thing for us is that this has brought gas prices down almost 22% from the 2023 highs that we were seeing back in September when we last covered this. Now, a big reason for why this is happening is due to an increase in supply, especially in Cushing, Oklahoma, where they have increased supply almost 3.6 million barrels, which is more than twice as much as what was expected. Now, unfortunately, on the other hand, OPEC, a group of big oil exporting countries, are talking and making plans to cut supply and keep a floor on oil prices. There are also some other countries such as Saudi Arabia and Russia who are making plans to put into effect supply cuts as well that are fairly extreme, even as much as 1 million barrels a day throughout the end of the year. Now, as we can see here, like I said, the increase in supply since September has decreased gas prices, and they have fallen almost on average 50 cents since last year's prices, which is a big plus for us right now. But these prices could be short-lived as those supply cuts will be going into effect and prices could start to go back up. Next up is some more news on cryptocurrency and what's going on with all these big asset managing companies as they're applying for cryptocurrency ETFs. As we talked about a couple of weeks ago, BlackRock, one of the first and largest of those asset management companies, had applied for a Bitcoin spot ETF, and many companies were following suit and doing the same. Among them was Fidelity, also a massive asset management company, and they followed in BlackRock's footsteps and filed for their own Bitcoin spot ETF, but they didn't stop there. Fidelity is now taking the reins into their own hands as they've gone and applied to offer a spot Ethereum ETF, another cryptocurrency that is head-to-head with Bitcoin at the moment. In doing so, Fidelity's proposal to the SEC included a recent grayscale court case in which the court found the SEC had no reasonable reason for why these ETFs should not be allowed. It would be expected that, similar to the Bitcoin ETF, this new Ethereum ETF would give the cryptocurrency an increase in exposure in the market. Similar to last time, this will likely increase the price of Ethereum as there will be a greater, wider market of people who have access to the ability to invest in Ethereum. And with this increased exposure in the marketplace, with more people being able to invest in Ethereum, this will likely increase the price of Ethereum now and into the future. While the price for Ethereum is currently down towards the $2,000 mark, it might be a good time to invest in Ethereum as those prices might begin to increase here in the near future. But as everything, it is still a risk, and if you don't have the money, you shouldn't do it. But if you do, then it could be an opportunity to make some quick returns. Lastly, we have this article that goes over how United Healthcare is being sued for wrongfully using an AI program called NH-Predict to deny elderly patients care. Now, while it was already known that this program had almost a 90% error rate, it was still used knowingly to deny these elderly patients those healthcare plans that they needed. Now, United Healthcare knew that most of these elderly patients wouldn't know how to go through this process of appealing the decision, and most of them would either pay out of pocket for that care or go without it altogether. Now, this court case will likely represent tens of thousands of patients, and the total damage claims can total up to almost $1 billion, which United Healthcare will have to pay out. Now, the reason to cover a story like this in a finance video is because decisions like this, where companies are making bad decisions that cost them money out of pocket, is where those decisions can affect their share prices. Bad decisions by a company and bad news in general oftentimes shows that the company isn't using shareholder money appropriately, and as a result, those stock prices will decrease. Bad news and bad business like this could cause current investors to sell off, as well as keep others away and distanced, as they don't want to put money into a company that is performing like this. And like I said, all these factors have an effect on the company as a whole and their share prices, which makes looking at things like this important when deciding whether or not you want to invest in one company or another. As always, thank you fine people for watching today's video. If you enjoyed it, please hit that like and subscribe button so that you don't miss next week's video, and we will see you guys next time.